What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 19th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to focus in on probably one of the biggest FUD stories that has been obviously spreading throughout the crypto space, and that is no other than the Grayscale 40,000 Bitcoin unlock. I know it sounds like a doomsday scenario. When markets are down, a large investor having 40,000 Bitcoin ready to sell on the market at any given notice. Is it going to lead prices lower? Well, it hasn't so far, and it doesn't look like it's going to, folks. I'm going to go ahead and explain why this is, because a lot of what's going on here can also be witnessed or kind of compared to traditional markets when there's unlocks in markets like IPOs, right? So let's go ahead and provide some context here. As you've been seeing throughout the headlines, this has been a story that really started brewing about a week ago and will continue to probably be talked about. But I'll go ahead and kind of dispel really what it's talking about and also why it's not much to be concerned about. If we go down here in this Cointelegraph article, you can see in this section here that they talk about the supposed 40,000 BTC unlock. Now, to provide some context, for those who don't know, Grayscale is the largest exchange-traded note product or financial product creator for cryptocurrency assets for traditional brokerage accounts. So there's the Grayscale GBTC product that you've probably heard about, which is an exchange-traded note that has a specific amount of Bitcoin backing each share. And overall, it's a way where people can get exposure to Bitcoin within their brokerage account. Now, what's really cool about for the Grayscale tool here is that it allows people to have the convenience of owning Bitcoin in their brokerage account, and they charge a minor fee every year that helps them become profitable for custodying the Bitcoin, covering their expenses, but also as well hopefully turning a profit. Now, the thing about this though is that Grayscale has to acquire Bitcoin in order to back these. It's their commitment in this case that each share has a fraction of Bitcoin backing it to properly have a 1-to-1 ratio, or at least try to attempt to do so. But the important thing here to note is that within Grayscale, as they start to implement more Bitcoin, they also can unlock Bitcoin over time, the Bitcoin that's backing these shares, as they might want to reduce the number of shares that they have issued. Right? And the really interesting thing here is that as people are really concerned that soon there's going to be a date here, and actually it happened yesterday on July 18th, that there was an unlock in this case of an overall 40,000 Bitcoin. Right. This is the 16,000 Bitcoin that got unlocked yesterday. And it's a part of an overall 40,000 that's going to be unlocked in the coming weeks. So with 16,000 Bitcoin now being unlocked legally and being, able to be sold in this case, I understand a lot of people would be concerned seeing that number. I mean, the market right now could not take, very likely, a $16,000 Bitcoin sell-off. It would clear the order books if it was to all come at once or even within a day or a couple days. That would be really bad news for the crypto space in the sense of the inflows and outflows. But as much as people, even like Willy Woo, who's kind of championed as this ultimate source of truth in the crypto space when it comes to data science and metrics, which I think Willy was a great guy and stuff, I just don't know if I'd take it at face value. He mentioned that this is generally bearish, right? And that this is going to be a negative net flow for the Bitcoin markets and therefore lead to price decline. Let's go ahead and take a look at the actual metrics here because we know Grayscale's addresses. We have these metrics readily available. We can take a look here at Glassnode. All right, starting back here in February 26 of 2021, from pre-unlocked Bitcoin that they already had, they started to continue a trend here, and a very consistent one at that, of declining from the 655,556 Bitcoin they had here at the peak, downward here, so it's only a metric of 650,000 Bitcoin. The company that had been providing a massive inflow of buy-side pressure in the crypto space is really not diluting it too much. Slowly but steadily. In fact, if you want to visualize this, we can see it right here. They actually have what is very, very common in any type of venture capital fund that has shares in a company that's now gone through its IPO and they've waited for the unlock phase where they have the ability to sell. It's a slow fractional reduction in the underlying position. Now, why aren't they just absolutely selling on the market? And I'll go ahead and kind of scroll up so you guys can see here. I know my webcam might get in the way. Why have they gone from making these massive inflows into the market and making slow but steady, albeit larger sell-offs on Mondays, about 100 Bitcoin per Monday, and then 34, 35 Bitcoin each following weekday. It's because they don't have any incentive to sell 16,000 Bitcoin on the spot market. It's plain and simple, folks. And this is something that the headlines don't ever give you the context around. This is not how traditional capital investors work. It's not like you have, for example, I'm trying to think of a good example here. Let's say, for example, I got a 10% stake in Apple, and Apple goes and IPOs the next day. Or let's say even Apple is to where it is today at a $2 trillion valuation. I still own my 10% equity, $200 billion of equity. Do you think I have any incentive to just dump all my shares and drag the price down to zero? Because I can tell you guys, the order books for Apple, as liquid as they are, if I did that today and I just sold all my shares, the price would literally tank until you get to a point where buy-side liquidity would just come in and start to match any sell orders that I had. But it would absolutely kill Apple stock. And it will never happen because of that. And the same goes here for Grayscale, who, albeit, has been very, very clear here, right? They're not selling the Bitcoin that they added in here. Those are the ones in many cases that are being unlocked now. What they're doing is fractionally selling Bitcoin that they've already had readily available. In fact, you can actually see here, this is a metric on bybt.com, that they've had massive unlocks already since as far back as the fall of 2020, right? They had massive unlocks here, right? Now they have some coming up here, again, as we go towards the later phases here of July, right? Albeit there's some big ones, like yesterday they had the 16,000 Bitcoin unlock. But they've had unlocks all the way through June, May, April, February, December. All I see is that they're going through a routine reduction pattern. And I think this also is telling of something as well, albeit that the Grayscale GBTC product, the exchange traded note, albeit there was, in this case, a premium for some time, and they realized very clearly now that the premium has turned negative, there's been a negative divergence here. Even though they realize that the demand for the Grayscale product was probably not as high after the short-term hype period as it was for the substantial. Sorry, let me reword this and stuff so I don't confuse anyone. Even though Grayscale might have issued too many GBTC shares and acquired too much Bitcoin, and they realize now that there's a negative premium, so people are paying a discounted rate for the GBTC product compared to the market rate. So you can actually buy the GBTC shares at anywhere from around, given over the past couple months, from a 5 to 20% discount. So Bitcoin 5 to 20% cheap, that's pretty good. They are not going to immediately just sell off Bitcoin like crazy to compensate for the premium. It doesn't work like that, guys. And what they've just started to do is the smart thing. They've started to slowly reduce the amount of Bitcoin on their balance sheet backing these products. And they're waiting for demand to pick up again. We've talked a little bit here on the channel about the next wave of institutional investors. There's the Ray Dalios of the world. There's, Paul Tudor Jones, all these guys who are slowly edging on saying, hey, we kind of want exposure to this asset class. And then the corporate treasurers that everyone was talking about back in 2021, they buy when prices are down here. That's why Grayscale doesn't need to do a mass exit of the market, because there will be more demand. And you can see that within the premium. We've been setting roughly a reversal in the trend here. The premium divergence here to the negative side was down here May 13th, before the sell-off even started. And when that sell-off started, you started to see the premium reduce. I want to go ahead and give you guys a big tidbit of advice. Not only should you follow Barry Silbert, who is not only the founder and CEO of Digital Currency Group, so he's a major player in the space. He's been around for a long time. But he's also one of the parent, Digital Currency Group is one of the parents of Grayscale, Genesis Trading, a lot of institutional companies. Barry has a very good insight, probably one of the best viewpoints into the inflows and outflows of markets. And it's really important, and I'll just go ahead and give you an example here. Someone had kind of given some credence here to Barry here. He's very, very good as much as, people have, people always have opinions about people, but I gotta say, Barry's one of the few guys in the space, unlike a lot of the VCs in the traditional world or in the crypto world, who will tell you, hey, here's what we're doing. You can either ignore it or you can listen to it and heed it as advice, right? And this was where, back here, he took a short position on Doge at the absolute top. And he said it in a nice way. Okay, Doge peeps, it's been fun. Welcome to crypto. We're so happy you're here. That being said, it's time to convert your Doge to Bitcoin. Disclosure, we've gone short Doge. And you can see the actual reference to the position. And since then, Doge is down 75%. Barry called the absolute top in retail euphoria. And he told everybody about it, right? Most people don't do this because they want retail liquidity to come in, right? But he didn't have his bags in Doge, so he was transparent. He said, no, look, we're taking a short position in this. It's been fun. Do with it as you will, right? And he's also he doesn't tweet very often, right? And this is the cool thing about Barry is that, like, when you have someone on notifications, you hope they don't spam Twitter a lot. He really puts out a lot of good points. Like, this is back at the end of June here. So back a couple weeks ago now, he said, there's a daisy chain of borrowers and lenders in the crypto space, most well capitalized, but some are not. Lots of leverage still in the ecosystem, including some non-obvious places. It's important to understand counterparty risk and where the weak links are in the chain. These are some really good, valuable tweets that can give you good insight into the state of the market. And again, it kind of, when you see this, for example, what this indicates to me is that back in June, not enough people had gotten liquidated. That's what I'm getting from Barry's message here, that there are still some people on very thin ice here that as we dip below back to the 30,000 range, might cause a stir of secondary liquidations. And that's why, again, as I mentioned, you guys, I'm one of the people in this case who built a position after the 50% discount. I'm in a pretty safe position, but I always make sure that any credit or margin that I trade on, I have extra collateral on. And that's what he's talking about there. Being well capitalized here is the major difference between people trading with leverage in a smart way and those who are just purely speculating and potentially risking it all. And one big thing that I'd say to look for today, because I'm in Europe time and I'm a little bit earlier here, tomorrow in the morning, in this case, as you wake up in the US, or actually today in this case, listen out for possibly Grayscale coming on to I think it's as Squawk Box on CNBC. There might be some news here, but this was something that Barry had retweeted. So again, to my point here, it's good to listen to what Barry has to say, because as much as he's one of the large players in the space, and usually I would say to kind of ignore them, Barry's got a good track record of when he has something to say, it's usually important. All right, but all in all, guys, I hope we've dispelled some of the FUD here today by actually looking at the on-chain metrics. They're obviously in a consistent reduction pattern that is not that dramatic. This amount of Bitcoin per week can be eaten up by one interested institutional investor with a couple million to their name. It's really not that bad. So anyways, yet again, here on the Data Dash channel, we're dispelling FUD as per usual, focusing on the real data metrics and focusing, of course, on the long-term vision. But in focusing on the long-term vision, let's go ahead and take a look at today's sponsor, Radix, which is aiming to build a really exciting layer 1 protocol to scale cryptocurrencies. Let's go ahead and dive into it. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look at a new exciting protocol in the cryptocurrency space known as Radix. Now, for those of you who are hearing about Radix for the first time, to put it simple, Radix is aiming to be a high throughput decentralized network in the crypto space that not only serves as a network for high throughput activity, but also serves as a foundation for decentralized finance, or DeFi, both for its users, but most importantly, developers, in order to build the essential applications that make the ecosystem so great. Now, I actually have a little bit of history with Radix, because Radix has not only been a long-standing project in the works in the crypto space, kind of working behind the scenes and not focusing on building too much hype, but I've also first heard about Radix as far back as July of 2018 when I visited a conference in Lithuania and got to meet some of the team members that I'll talk about in a little bit. And this was a project that really started to build up its track record and really start building towards its vision during the depths of the bear market. And I always like to follow the builders who are building in the least optimistic times, those who are building and seeing the 2 to 3 year or longer vision for the crypto space. So I'm going to go ahead and talk about a few key things here today. I want to dive into the general philosophy about what Radix is trying to achieve, dive into the important components such as the Radix engine and its consensus mechanism, and then outside of this as well, I'll talk about some details such as the team, as well as the existing tokenized version of the token on the Ethereum blockchain. So let's go ahead and dive straight into it, guys. So we're about a little under 10 days here away from the Olimpia mainnet countdown. This is the first iteration of the Radix network that we have to keep our eye on. And we'll talk about the roadmap a little bit as we go throughout the video. But I want to go ahead and talk through some of these kind of accolades here, or some of the major focus points that make Radix a very interesting protocol. You always have to start at philosophy for any type of layer 1 competitor. And to be honest, there's a lot of layer 1s out there that just duplicated what Ethereum did or took a slight iteration of what Ethereum's done. Radix is really focused on the bottlenecks that I think have really prevented the overall crypto space as a whole from getting to a mature state where you have institutions ready and willing to use them, right? The DeFi ecosystem, broadly speaking. And one of them in this case is the ability to actually build applications in a variety of fashions, but not breaking things. And you'll see that this is a big theme of Radix here, that they have a high emphasis on developers and building the proper developer tools so that not only anyone can build applications, but outside of this as well, that you don't have the flaws that you can commonly find in 1 or 2 lines of Solidity code in a DeFi application. And that's why auditing agencies have become so important in traditional networks in the crypto space. The great thing though is Radix is trying to solve this issue, to make sure in this case that you can build purpose-driven DeFi applications but not have to worry about breaking anything, but also not waiting too carefully and missing out on the market opportunity. It's this really big dilemma that developers are put into because they want to get something out to market, build the next big DeFi app, but also they don't want to risk losing everything. There's been tons of DeFi hacks, to be completely candid, and it's a big problem that needs to be resolved for. And what better way to help in doing so than not only provide the developer tools, but also reward those, in this case, who build the ecosystem around you, who build the value. And I think that that's a really big flaw in most layer 1 protocols, that outside of just the open source drive to build things, you really don't interest the commercial interest or people who need to make a living, in this case, off the applications they build, to build the best products for the broad ecosystem. So that's another thing that, again, Radix is focusing on, is rewarding people who contribute to code within the ecosystem and scaling without friction here, talking about the algorithm. And again, you'll see this big emphasis on making sure that we can build a proper ecosystem, not in this just in the sense of scalability. That's one thing. Doing scalability right is fantastic, but you also need to be able to provide the tools and the means to build a valuable ecosystem. You can have all the technology in the world, but if you don't have the developers and the community, it's not worth a dime. Right? So let's go ahead and actually talk about some of these different mechanisms. Now, if you guys want to, I highly recommend, as I always do on this channel, guys, go out and do your own research, look into the actual white papers. They have some great resources if you come here towards the website and dive into the papers where you can read about the broad white paper vision of Radix and how it wants to build a DeFi ecosystem, as well as dive into the consensus white paper and even the economics and atomic cross-shard consensus papers here. Now, you guys can dive through this yourselves if you'd like, but I want to go ahead and talk about the Radix engine. This is one of the first important components that you'll want to know about. Now, there's a really cool video from Matthew Hein here, who's one of the leading team members over at Radix. He's really helping on the developer side. And there's this really awesome picture here that talks about the backend developer experience and how they kind of compare written text in this case, and people writing hand by hand on copies of books, to actually going towards the printing press, and how Radix is going to completely and systematically change how DeFi applications are built. And it's basically, simply put, through a modular means. So you can, for example, manually code, modify, get audits on smart contracts. I've been through a variety of projects who have had to go through this. And the problem is that if you just miss one single bit of code in this case that's being used in a unique way, the problem is that you can hit instant stagnation, or worse off, if you deploy it on mainnet and someone spots it, it can cause a breach in the contract. Whether you're dealing with flash loans and all the other elements of DeFi, that can be a major problem. And a big reason why I was a big supporter of a project like Unibright back in the day is they had this focus on modular smart contract development across very different layers. And Radix takes this to the next step on its core layer 1, making sure that all applications are built in a modular fashion through blueprints, templates that help you to initiate certain functionality that also at the same time guarantees security. And makes sure that these modular pieces can actually coexist and operate together without issue. right? It takes a lot of work to be able to do this, but they've actually gone about building this through their new crypto language, Scripto. I hope I'm pronouncing that right. I think that that's the major way to pronounce it. But Scripto is basically the core language, similar to how Solidity is the native language for Ethereum. And it's based heavily around a modular environment where you can plug in these different types of blueprints and frameworks to actually build the applications the way you intend to build them. And that's a very, very big problem with a lot of layer ones, that over the past couple of years, unless you were willing to, or had the ability to either learn Solidity or get Solidity developers, you just simply couldn't build the applications you wanted to. And even if you could do that, some of the best Solidity developers, just like any other great engineer, are going to have their flaws, and they need code review, extensive code review, that can sometimes prevent you from getting to market at the time you want. So again, this is a big emphasis that I've seen on a couple new layer 1 protocols, but I'm happy to see at the core of it, this is a major focus point for Radix. And I think that they're doing it in the most smart and possible way out there, that even a founder like myself who's in the DeFi ecosystem could actually just go about building these tools, or getting other people who could start to onboard much quicker into building DeFi applications. Now, Cerberus here is the consensus mechanism that Radix utilizes. And this is important to understand here. You've got kind of the application layer here, which is the Radix engine, where applications are functioning. Think of this almost like the equivalent of the Ethereum virtual machine, right? That's where the application's interacting. There's activities going on. But you've also got below this, the most important layer, which is consensus. You can have the best environment, you can have all the users and everything, but if you don't have the consensus means to provide not only the network to reach and validate on consensus, but also provide scalability long-term, it's going to be very difficult to be that DeFi platform. And this is where Radix has really put a lot of focus. This is something that even before their focus on DeFi, they've been really hitting home on as far back as 2018. Now, Cerberus is the means of consensus, and one thing that they focus on in order to reach that throughput is something that a couple other layer ones are trying to do, and that is providing a means to sharding. Now, sharding is where you can start to break up the work of consensus into multiple different kind of pathways or highways in a sense. With Ethereum right now, you can only do 3 to 15 transactions. It really depends in this case on the frequency of the mining reward. But overall, in this case, when people discover a new block, but you generally are going to have low double-digit transactions per minute on Ethereum. And that's not very, excuse me, per second in this case. It's not very effective, right? But what you have here with Cerberus is an actual implementation, a true implementation that's going to hopefully be live here in the next couple days of paralleled consensus or parallelism, which is using a means of sharding. And what's really cool about this is this basically means that Radix will be able to start in an actual mainnet setting, right, with their own crypto wallets, with transactions, etc., and the nodes playing a role in the network, that you'll be able to actually have a mean of parallel consensus, where you can start to ramp up other means of shards on the network to provide more and more throughput for transactions. And everything will be able to operate seamlessly in parallel. Now, if you're more interested in kind of the technical side of understanding how this will work, I highly recommend you guys can dive through the white paper. It's a little bit probably intimidating at first, as most white papers, but you can dive through it. It's only about a little bit less than 20 pages if you want to go through the citations, but they have some great diagrams that actually visualize here how transactions can work in parallel through these different shards. And this is something that, again, albeit that a lot of people are working towards, even Ethereum is working towards sharding. Sharding probably isn't going to come until late 2022 if we're lucky with Ethereum. So who knows? Radix being an early network in this case and having a great new piece of technology that, albeit they've been working on it for a long time, might be the perfect technology with the proper ecosystem and the right tools for the right time. So we'll have to see. Again, I think that it looks really interesting overall. From my understanding, I've been really interested to see various implementations of sharding out in the crypto space. But again, I highly recommend you guys read through the technical paper here to learn a little bit more about Cerberus and how it aims to actually provide that throughput and scalability. Now, I want to go ahead and dive into some of the other details here. Now that we've talked about the application layer, consensus, I want to focus a little bit on the first iteration of the roadmap, Olimpia. This is loading and launching here in the next coming days, less than 10 days away from where we are right now, on July 28th. Now, the major thing here to understand about this update, to kind of cut out the noise, just focus on the substance here, is simply what Olimpia is offering. And this is very similar to, I would say, Ouroboros in the sense of Cardano, for those of you who are interested in kind of competing layer 1 protocols. And that's basically launching the core needs of any layer 1 system. They're going to have the Radix desktop wallet for most of the crypto users out there who are likely desktop users, where you'll actually be able to store XRD, the core token of the Radix network. It'll also have the Radix Explorer. So every blockchain is going to need some kind of Explorer to confirm transactions and to see the state of the network, to see the rate for transactions. And you can see here, you've got the Radix Explorer. It's going to allow you to do just that. And then also, of course, the Radix node to participate here within not only the Radix engine, but also the Cerberus consensus mechanism. So these are the three core kind of pillars that are going to be needed. And the nice thing is, as always, it's expected to be, you'll be able to view it over on GitHub, where you guys can actually review the project itself. I'm not an engineer, but again, it's good that they have that open source so people can review it. Now, outside of this as well, you can also store it in a Ledger NanoS as well. So you've got a couple different areas you could store Radix if you're interested. But as we'll talk about, the Radix token hasn't launched yet because mainnet hasn't gone live yet. So let's go ahead and talk a little bit about this roadmap. In a couple days, we'll have Olimpia launching, and then you've got Alexandria and Babylon in this case, that are going to be focusing on slowly but steadily up until 2022, rolling out the necessary tools to build a full-on DeFi ecosystem. This means, as we talked about earlier, not only providing and battle testing the consensus mechanism for base transactions, but providing the framework here for developers to build modular-based tools within the DeFi ecosystem that are time-tested and secure, that also can scale out and build the environment for users to come. So that's a big focus here going into 2022. It's not something that's going to happen immediately. And I love how Radix has been very transparent and honest about that. They've been working on this project for a long time, guys, right? They have this time-tested philosophy of slow and steady wins the race, and doing things proper is most important. And you'll see that through all the advertisements and materials for Radix. It's all about making sure that you build applications that aren't going to succumb to code failure and eventually lead to the reality that a lot of people are going to lose money if they use an improper smart contract or decentralized application. Now, after we talked about the key steps here on the roadmap, there's the team. Now, you guys can always dive into it. It's open here on the website where you guys can dive into it. But the person I've gotten to meet is actually the CEO of the project, Pierce. Pierce is a really cool guy. I actually got to have a really solid, I would say probably for him at the time, he's pretty busy and stuff overall, but a really good 45-minute to an hour-long conversation at the conference back in Lithuania in July of 2018. It was really great to talk to him because you could just tell overall Pierce and the team have had this vision for some time before that, and also know going forward that it's going to take time to really build a substantial competitor to networks like Ethereum that actually can provide the developer framework that Ethereum never really did. And even though Ethereum has a great developer ecosystem, we could possibly see a new layer 1 protocol like Radix really start to outpace networks like Ethereum because it can broaden the scope of who can build on its network. But again, Pierce has exited Y Combinator supported companies in the blockchain space. There's all types of really powerful individuals on the team. So I recommend you guys take a look through if you guys want to do some due diligence on the team. Again, I think I've got people from a variety of different backgrounds here playing a role on building Radix. Now, the one thing I wanted to share with you guys, again, I'm not here to talk about the token in this case. I like to focus on the technology, but I always want to let you guys know that if you're interested in getting some kind of exposure to Radix, you'll not only be able to get access to the token once it goes on mainnet, but there's a tokenized version of it on the Ethereum blockchain that you can trade through Uniswap, etc. And if you're interested in it, it's the EXRD token, kind of like an eRadix in this case, or Ethereum Radix. So again, if you guys are interested, you can check it out. But again, just make sure that once that mainnet goes live, know that you can't send the token from one chain to another. It's important to note that they are on two separate networks. Perhaps there might be a bridge. Perhaps they eventually might have some kind of claim mechanism. But again, overall, know that they're on separate networks. But it should give you that ability to kind of have a price exposure in this case, as it's kind of a one-to-one peg for the Radix token. All right, so that's it for the review today and the overall video, guys. If you guys liked any component of the video here, if you have some things you want to share, not only consider leaving a comment down below, but also consider dropping a like if you guys found this conversation interesting, if you found Radix and the topics we discussed today quite interesting. But that's going to be it for today's video, everyone. Thank you all so much for watching and letting me ramble as per usual, and I'll see you all in the next video. Take care, everyone.